MADSTAR Investing back again with another video. Today we're going to be looking at something very fun, and that is human behavior. We're going to be studying human behavior today and related to options trading, and it's just something new I've learned and I just want to share this with you guys. So let's get right into it. So normally I trade indexes like S&P 500. I would normally open a SPY chart, which is the S&P 500 ETF index. And this is my Thinkorswim trading platform. Obviously, this is my demo account. Once I'm 18, I'm gonna start doing real trading, but let's get into it. So, once you open your SPY chart, what you want to do is you can't really see the indicator here, but this is the implied volatility indicator here. And here is the relative strength index indicator. And you can look at my other videos to see how you actually adjust these, what settings I use for the RSI. But for now, you open these two indicators, and what you want to do is you normally want to have a 20 to 30 day, that's what I like, option trade. So what you want to do is have a 20-day or 20-day chart, and here you can see when the best time is to invest. So obviously RSI, when for me it goes below 40, that's a good signal to buy. And when the implied volatility is really high, it's good to start like selling puts for the S&P 500. And it's also good to know what's happening around in the market, and you must have some reasons to stay bullish in the market. Like obviously, if a recession is coming and you really certain it might come, and you know something's going to happen as an insider even, then it's good to stay away from these things. But normally the market stays bullish. The S&P has like a 6% increase every single year on average. This year it's been much more, I feel. Yeah, let's get right into it. So this was one of the trades I had, and when the implied volatility was really high and the RSI indicator was showing a buy, and RSI basically means it's being oversold. So here is where I bought it right now, a put. If you can, I'll show you that in my monitor. So I bought it at these prices here, and obviously you have to multiply them by 100. And so my net credit I received was 162 minus 179, which is 17. So I received 1700 from this, and right now my profit from this has been 3,000. And I bought around 200 of them. So my maximum profit would be 3,400. So I am almost there, guys. I can already really close out my trade, and maybe I can analyze this trade. Analyze closing trade. View trades. Okay, never mind. Yeah, that's about it. But I bought it for the 28th of October weeklies, and I bought it on the 3rd of October. So if I can check what the time right now is, it's 7th of October. So that was 4 days ago, and that's a pretty nice return for 4 days, I would say, because my initial investment was 47,000. So that's nice, actually. I think that's about 5%. I think it was not a risky trade. No, I think it was a bit less. I think it was 30,000 actually. That's how much it's worth now. So wait. Okay, I can't really see right now. I'm sorry. But yeah, so that's what happened. So let's get back to the human behavior, emotional part. So when it's being oversold, people realize that, and the masses drive the market because the whole market's about supply and demand. And once people start buying and see a reverse in pattern, then more people join because people are greedy, and that's just the way it works. And people don't want to miss out the action. So when they see a reverse in trend, like you can see in the past 20 days, the market's been falling, and here you had a breakthrough. Your moving average line crossed over, so that was a good sign already that you should buy. And so right now it's recovering. It's at 293 and implied volatility drops. So when implied volatility drops, the vega on uh, your vega, like there's delta, gamma, vega, theta, and your vega is like the implied volatility is in your favor, and you can profit from that. So that's another key thing, and that's why you should always sell when implied volatility is high. You can sell calls, sell puts, but please, please, please do not buy calls or puts because that's just not a great thing to do. And unless you're 100 and even 10%, I still won't recommend you to do it because in the end, it's all about implied volatility. So maybe I could have showed you my analysis trade. Yeah, that's my trade. So in my trade, all I would need is where the 29th is to concentrate on this blue line actually. So as you can see, my blue line, my maximum profit is actually 6,200, and all I need is um, my blue line to stay or 283, and right now it's trading at 293. And as of today, if you go to the 293, I am making, yeah, I'm making around $2,639. So that's pretty nice. Obviously, I just have to wait 20 more days and that amount will triple. So here you can see that the time decay, the delta, is actually in your favor. And all I need to do is just be patient, and that's a pretty good return because that's around a 10% return in just 20 days. So that's about it, guys. I hope you guys enjoyed this concept of human behavior and linking it to options. I will try to research more on this, and I actually find it really nice. Um, I would appreciate if you could subscribe to the channel, like my videos. I haven't told you this, but I'm actually doing this for a school project, and if you have any more questions related to options trading, and if you have like question about how to buy trade, or let's say what is a call option, any basic simple questions, I'll always be there to help you guys. I can literally maybe even Skype you because I really just want to help you guys. And make sure if you really need help, just comment and I'll be there to help, guys. And thank you guys for watching this video. I hope you enjoyed it, and that's about it, and I'll see you guys next time.